Next, Tom, what else is
Well,
going on?
Boral, I mean, they say bad news comes in threes. Well, I had what I think is its third profit downgrade for the year, so maybe that's the end of the bad news of Boral. We'll have to see. And also Perpetual, they had a big profit downgrade. They say, as always, the future will look better than what it currently does, and they've also sold their self-managed super fund business, which I thought was a slightly interesting move.
Yes, just on profit downgrades, Jared, you're an analyst. When you see 2 or 3 downgrades, what do you think of a business?
Yeah, the problem here is idiosyncratic problems that we're talking about. After 20 good years, a lot of Aussie corporates are getting found out, and it's partly a structural change story. It's partly slower growth, it's high costs. Retail, I'm not sure discretionary retail's finding a bottom. I think they could be classic value traps. Take out the property, you're left with a shell that's going to shrink. Media, we've gone through the list in this program, and if on top of that we now get slower global growth and next year weaker Aussie growth, what are they going to do? They're going to continue to take out costs as probably the last option. And after 2 decades without a recession, they probably all got fat everywhere.
What about building materials? Do you think they're finding a bottom, or could they?
I think that's the one area now with RBA rate cuts, so I think there'll be more RBA rate cuts to come. The one area that should start to bottom out. I'm not very positive about house prices themselves, but the actual activity should start to bottom. They've got good operational leverage. There are signs that the US housing market is bottoming, which is positive for companies like Hardy's. So, yes, that's the one area that you might say cyclically near an inflection point.
A lot of people think the Australian property market's still in a bubble.
Prices, for sure. Prices too expensive, but I think
it's hard to divorce prices from sales.
In the periphery of the cities, some of the infill sites that really are regulatory restrictions. We need land releases, we need councils to loosen up, and that can happen even if you're getting your bread and butter average house price flat to slightly down. Of course, the real area of weakness is the top end, that's the broker belt, and the holiday home market, which we were paying ludicrous prices for, and you're now seeing in the Central Coast in New South Wales, down Mornington Peninsula, Melbourne. I mean, they're starting to have bog-off sales. Buy one, get one free.
Adele, you've got a view about this, that there are good and bad in each sector, aren't there?
Well, yeah, there are. If you have a look at the construction sector, you've got UGL, which is doing well. There haven't been any profit downgrades. They're really standing firm. Share price has been steady for the year, so it's outperformed the market. And look at it against a Leighton, which was, another company went under a few weeks ago, a listed company in construction. So there are some good ones.
I suppose it's a time when good management really comes to the fore and management really gets found out, if there's any weakness in management, they get found out.
Like what did Warren Buffett say when the tide goes out, all those swimming naked get exposed?
Just one thing, Jared, you said about building materials. I do wonder what the carbon tax might do. I mean, things like cement and so forth are very energy dense in their production, and we don't know what the carbon tax might do to that yet.
Oh, look, most of the estimates are outside direct energy costs, so we're all going to see our electricity prices going up. You're talking about something that's an order of magnitude smaller than the GST. And you remember the GST, we rushed to build homes in the first half of 2000, and then for sure there was a drop-off. We've seen no rush to build a home ahead of the carbon tax. So I personally don't think it'll have a big impact on the sector.